Good morning, all my dear students of Government First Grade College, Gauri Bidnur, and all other students in general from any part of the country or any corner of this particular country and the world. This is Suresh Babu from Government First Grade College, as I have already briefed you about my introduction. I've already been actually making these online YouTube videos to assist the students at my college and even to reach outside as well. This is being noticed nearly about 138 students have actually viewed yesterday's video, and I do not know how come out of 200 plus students, only these many students have only watched and giving their feedback. I don't understand the logic behind. So hence, let me remind once again. So 7th, I'll be back in the college for the normal classes. So you are going to write the test for redemption of preference shares, whatever the sums I have solved online and whatever the sums which are given for the homework purpose. Each and every student is expected to take up the test on 7th of February, Tuesday. Don't say, I do not know. You can't, please deny, right? So prepare from now onwards. Those who could not watch, let everybody watch the complete video. So let me take you through this particular video lecture, right? As have already shown and marked over here, illustration number 9, the balance sheet of Krishna Private Limited as on 31st March 2022 was as follows. What different sum is this? This is very unique sum, first time it is being encountered, because part of the balance sheet only has been given to you. See, this is a particular liabilities. We have share capital. How many shares? 18,000 shares. This is 9.5%, say 9.5%, okay? 9.5%. This is what? Dividend. It is not important for us how much percentage of dividend is being given by the company. But each share is 100 rupees. 18,000 into 100, 18 lakh rupees. Preference share capital. Then similarly, there is 40,000 equity shares of 100 rupees each fully paid. 40 lakhs. Total, you have 58 lakh rupees in the form of share capital. Reserves, share premium, 5 lakh rupees. General reserve, 9 lakh rupees. Total, 14 lakh rupees. So it is not been divided separately. So together they have written inside and written. Secured loans, 18 lakhs. Current liabilities and provisions, 16 lakhs total. 1 crore, 6 lakhs. Okay. So this you could notice, I think, yes. The board of directors decided to redeem the preference shares, right? Both by issue of fresh capital and by utilization of reserves, but without any further borrowings. So what does it mean? It means preference shares, right? How many preference shares are there? 18,000, 18 lakhs. So this much preference shares have been decided to redeem. For which how much you need? Minimum 18 lakhs. Because redemption, how the redemption is being made? Is it on par or at premium? Is it disclosed in the sum? Nothing. But general rule is that if the premium at which preference shares have not been discharged, then it is quite obvious that on par value, that is 18 lakhs, minimum should be handed over to preference shareholders. Then for this case, you are advised to advise, right, them regarding the scheme for redemption and draw up the balance sheet after redemption along with the journal entries. So what is they're asking? They're asking you to devise a scheme. So you need 18 lakh rupees for which there is a hint. What is the hint? The hint is very clear that you can use, right, new shares. See, the preference shares both by issue of fresh capital, that is fresh shares, and utilization of resources. Okay. What resources could be utilized to repay nominal amount to preference shareholders? You could utilize general reserve. How much is general reserve is available? 9 lakhs. Correct. You need 18 lakhs. 9 lakhs is available from general reserve. How much more you need? The difference in between these two is 9 lakhs. Correct now? So to this extent, how many shares have to be issued? So equity share, each one is 100 rupees. So 9 lakhs divided by 100. That means you are utilizing, that means issuing 90,000 shares of 100 rupees each. So you get 9 lakh rupees. Got my point? So after getting 9 lakh rupees, then this 9 lakh rupees will be transferred to capital redemption reserve. Total becomes 18 lakh. This 18 lakhs will be repaid to preference shareholders. Correct? Then let us see. So out of this first journal entry, we need to write according to this author, this one. The third one should be the first one. Why? You are issuing the new shares. How many? 90,000. Each share is 100 rupees, correct? So 9 lakhs. Sorry, 9,000. I'm sorry, not 90,000, 9,000. Into 100. 90,000. Yes. So bank account debt are 9 lakhs. To equity share capital account 9 lakhs. New shares are issued, right? Second journal entry, we shall write this. General reserve account debt are 9 lakhs. To capital redemption reserve account 9 lakhs. Okay. So this 9 lakh rupees received being the fresh issue of shares which has been made. Okay. How many shares are issued? 9,000 shares. Okay. Into how much each share? 100 rupees. How much it becomes? 9 lakhs. This 9 lakh rupees has been received. Remaining 9 lakh rupees we are adjusting from general reserve. Okay, general reserve account data to capital redemption reserve. How much? 9 lakh rupees. Being the reserve created. You can write CRR created. Okay. Now, you need to transfer this one according to this author. What is that? Redeemable preference shares capital account data are 18 lakhs to preference shareholders account 18 lakhs. Without this entry, you cannot make the payment. Why? Because preference share capital to be transferred to preference shareholders account before making the redemption, that is the provision. Okay. Now, you have 18 lakh rupees. Cash is also with you. Then pay. This is the fourth entry. Preference shareholders account data to bank account 18 lakhs debit, 18 lakhs credit. Being the preference shareholders paid out, that is redeemed. Now in the balance sheet, what changes you will have? See, 18,000 preference shares, this will go off because you've already paid. That doesn't come. Then what is remaining? 40,000 plus new shares you have issued. How many? 9,000. Correct, no? 49,000. It becomes 49 lakhs. See, this is a balance sheet. Share capital, 49,000 shares of rupees 100 is 49 lakhs. Okay. Then share premium, we did not use at all. See, reserves, share premium, how much? 5 lakhs. So please write as it is. See, reserves, share premium, 5 lakhs. So what is very important, I've been telling you, have the pen, have the notebook with you, listen, write, simultaneously you write. That's the reason why. Pay the attention to the movement of the cursor. When the question is to be shown, I'll just move. Then the answer is to be shown. I'm moving the cursor. Many students are doing this mistake. They don't pay attention at all. Right? So that doesn't work. Then There is capital redemption reserve which we have created by writing the journal entries. Okay, this is not the general reserve. We have instead capital redemption reserve. How much? That is 9 lakh rupees. So in total, we have total 14 lakhs. This is what shareholders funds. Now we have secured loans. We have not touched, no change, 18 lakhs. Current liabilities and provisions, 16 lakhs. So totally you have 97 lakhs. So you might be asking, sir, this is off balance sheet. Yes. Why off balance sheet? So much of information is only available with us. Because liabilities information is available, hence we have prepared liabilities side of the balance sheet. That's it. That's done. So please revise. I don't say here. So here, I don't know. I put into mark, that is multiple. So this is what? Homework. Okay. How many times I leave you? This is the homework. So I think you got the question clear. If it is not clear, you ask your friend, they'll help you out. So homework sum you need to do of this, right? So the figures to be multiplied, I'm giving you the option. Question mark means I'm giving you the option. Is it 2 times, 2.5 times, 3 times, 3.5 times, 4 times, 5 times? Is it 0.5 times, 0.2 times, 0.1 time? Okay. Whatever the number it comes in your mind, is you put it and write. Okay. So you need to understand the illustration. That's the only the takeaway. So I expect, yes. So this is a question paper problem, 2007. Balance sheet is given. Lankesh Private Limited, 31st 3, 2022. Fixed assets, 18 lakh 50,000. Investment, 7 lakhs. Stock under task, 4 lakhs. Preliminary expense, 20,000. Bank, 30,000. Total, 30 lakhs. So preference shares of rupees 100 each, 80 rupees paid. So remember this partly paid preference shares. Okay, 8 lakhs. Then how much to be received? 2 lakh rupees. That is what final call. When you make final call, suppose these shares are redeemed, you have to make final call. Okay, so preference share final call account that are 2 lakhs. To preference share capital account, 2 lakh debit and credit. Okay, being final call money due. That's a narration. When the money is received, bank account at R2, preference share final call account, 2 lakhs debit, 2 lakhs credit, being final call money received from, okay, the preference shareholders. Correct? No? Then equity shares of rupees 100 each fully paid, 10 lakh rupees. Reserve fund, you have 3 lakh rupees. Profit and loss count, 2 lakh rupees. See, these both together, 5 lakh rupees, could be utilized and transferred to capital redemption reserve for the purpose of redemption of preference shares. Those are divisible profits. Share premium, 1 lakh rupees. This could be used only to pay premium on redemption of preference shares alone. Current liability, 6 lakh, total 30 lakhs. What is the condition? As on the above date, the preference shares are redeemed by making fresh issue of sufficient number of equity shares. What are they saying? Okay. See, this we are not making, we are not ensuring at all. So they're asking us, as on the above date, the preference shares are redeemed by making fresh issue of sufficient number of equity shares. Investment worth rupees 3,50,000 are sold at a loss of 50,000 rupees. You are required to pass the necessary journal entries. Very, very simple sum. So how much we require for preference shares? For to pay preference. First, 2 journal entries. One is final call due, final call received. 8 lakhs becomes 10 lakhs. Now you need 10 lakh rupees. Okay. If you need 10 lakh rupees, okay. So sufficient number of equity shares could be used. So 100 rupees is the per share, correct? 100 rupees. 10,000 into 100 is how much? 10 lakh rupees. So 10,000 shares needed to be issued to raise 10 lakh rupees. Then you make the payment. Before that, what is very important? Cash and bank, you have 30,000 rupees only. New shares you are issuing, so then you are getting 10 lakh rupees. And one more thing, investments 3,50,000 rupees. okay, are sold at a loss of 50,000. Investments is how much here? 7 lakhs. What they are saying. So half of the investments you are selling, 3,50,000 worth for 3 lakh rupees you are selling. So bank account debtor, 3 lakh rupees debit. Profit and loss account debtor, 50,000 debit. To investments account, 3,50,000 rupees, being investment sold at a loss. Why you are selling? Because there is the need of the cash to be, which would be payable to preference shareholders. Let us see what it is all about. Hmm. What is the condition? As on the above date, the preference shares are redeemed by making fresh issue of sufficient number of equity shares. So there is an assumption. He is not issuing 10,000 shares. Okay. According to him, this particular author, you have got 3 lakh rupees. See here, the journal entry. See, reserve fund 3 lakhs you have. Profit and loss account 1,50,000 rupees. Why 1,50,000? Out of 2 lakh rupees profit, okay, 50,000 rupees loss is being booked on investments while selling. So you have got 1,50,000 plus 3 lakh, 4,50,000 rupees you have got. Okay. Then remaining, you need the balance figure. Okay. So for which the company is issuing the equity shares. So this is the wrong way of solving the sum. This is absolutely wrong. So how it has to be rectified then? What this author has done, partly paid up preference shares cannot be redeemed at all. Okay. So here he has missed. So according to this, the first journal entry, okay, we'll alter it, no problem. First journal entry to be written is preference share, final call, account, debtor. How much? 2 lakhs debit, right? 2 lakhs debit. 2. Preference share capital account. How much? 2 lakhs. I will write L. Okay, credit. 2 lakh debit, 2 lakh credit. Second one. What is the narration? Being preference share call money due. Second generation journal entry, bank account debtor. Okay. 2. Preference share final call account. How much? Same. 2 lakhs debit, 2 lakhs credit. This is the first, this is the second. You need to do this. Then you should be writing this. What is that? Bank account debtor 3 lakh. Profit and loss account debtor 50,000. To investments account 3,50,000. Being investment sold at a loss. This is right. The fourth journal entry, this is also right. Reserve fund account debtor 3 lakh. Profit and loss account debtor 1,50,000. Capital redemption reserve account, how much? 4,50,000. Okay. So in total, you need how much? In total, you need, right? This 3,50,000, sorry, 4,50,000. Okay. You need how much? 10 lakh rupees to be repaid, right? You need 10 lakh. That means 5,50,000 rupees worth of equity shares to be issued. Instead, he has written 3,50,000. This is wrong. Okay. So you need to write bank account debtor to share capital account. Make this 5,50,000. It is not 3,50,000. 5,50,000 is the correct answer. This is the fifth entry. 2 entries he has missed. You need to write. Then The next entry, preference shareholders account data to bank account. Okay, this is the sixth entry. 8 lakhs is written, make it 10 lakhs. Okay. Preference share capital account data to preference shareholders account. This is correct. Sixth entry. Now this is the seventh entry. This is the seventh entry. Preference shareholders account data to bank account. This is 10 lakhs and 10 lakhs. This is right. Final payment. Bank account data to bank. This is not required. This is not required at all. Okay. So this one, what you need to do, this was quite challenging sum. So please revise once again, review and write it. Okay. Uh, uh, I hope this has exceeded today. It's all right. Nothing is going to be, you would not be losing anything out of this procedure, but try to learn. This is how the critical aspects which when you go deeper and deeper, definitely you would be getting the knowledge, practical knowledge. So thank you for watching this particular video. Then before quitting, if this is the first time you are watching, what you need to do, like the video, hit the subscribe button, and close to that, there is a bell icon. Hit that. Then share it to everyone else. Spread this, okay? So if yes, in the feedback you mention everything clearly, let it be at least 2 paragraphs, 3 paragraphs, 4 paragraphs. Then more if you write, then it assumes that you've been able to learn. Thank you. This is Suresh Babu from Government First Grade College. Thank you all.